that Mr. Dan Ives has been dragged into the city to come talk to some of his clients, senior equity research analyst at Wedbush Securities. Always great to have you with us. Of course, you've got an outperform rating over on Apple, target price $200 a share. Does this sort of market volatility hurt? Does it make you rethink some of the underlying data and modeling that you do?
Look, I mean, this is as panicked as I've seen going back to 2001, 2009, and early days of the pandemic. Look, I think right now, in terms of investors, it's trying to understand what do numbers look like for 22 and 23? How does the zero COVID China situation affect Apple? How does it affect Tesla overall supply chain? So much uncertainty, and you're just seeing really a capitulation here. And look, and that's why, like, in our 22 years doing this, I mean, these are the times you got to just stress test, look at the fundamentals, and pick your winners. A lot of froth's going to come out of the market, but you cannot paint them all with the same brush.
What are the fundamentals telling you about a company that's pulling in $90 billion of free cash flow a year and buying back stock to offset that because they're generating that much cash?
Yeah, and Taylor, I think the whole issue here is like part of like this next leg down in the sell-off that we've seen. A lot of it's because of zero COVID issues in terms of what that's going to do to supply, demand for Apple. It's about 20% of iPhones. But it all goes back to, like, you're not buying the stock for this next quarter. You got to focus on the other side of the storm. Where does this go? Where does underlying demand look like? Demand's outstripping supply still by 15, 20%. And I think that's what's happening here is that I think every tech company is getting painted with the same brush from a demand perspective. But when you look at Apple, that's one, obviously, it's held up extremely well. And as that's fallen, as well as Microsoft, that's really been just a sort of darker sign for the broader tech tape that we continue to believe is just going through almost a historic sell-off.
I am curious, Dan, though. I mean, some people have raised some questions and some concerns here with regards to the hardware business and Apple's continued ties to China, whether it's mainland China or some of the other neighboring territories for production here. And there's been some questions as to whether they should consider moving more of that production, or at least diversifying more of that production away from there. I'm curious to you, do you think that matters to Apple itself and to you as an analyst who covers this company?
Well, Apple's essentially doubled down on China. Because, look, if you like $2,500 iPhones, then it would be great if they produce in the U.S. I mean, it just comes down to, like, this is going to continue. The supply chain is in China. Actually, Apple's doubled down there, right? And it's part of the ecosystem. It's part of why Apple, is where it is today. So I think that's one. Of course, in times like this, you're going to see that come up more, especially on the zero COVID. And it's obviously been a massive frustration, not just for investors, but I think within Cupertino in terms of from a production perspective.
You're a man we always get on about Apple, but we'd be remiss not to acknowledge that you cover an awful lot of other companies. Microsoft, another ballast that really Remainers time and time again been bringing up as to why it's getting sucked into this sell-off. You're also on the more volatile stocks, the likes of Tesla, for example, has got its narrative all of its own. The DocuSigns that have really been hurt by finally getting the dose of, well, post-COVID life. I'm interested, Dan, just how much longer you feel that you said it's capitulation. Is it yet? At what point do you start to feel like the sentiment has got low enough?
Look, I think fundamentals right now are just massively disconnected from where these stocks are. Even going back to historical, if I look at where these all traded, whether on a on a free cash or on the EBITDA perspective, I mean, look, Microsoft as well as FANG is trading at 10.5, 11 times EBITDA, market multiples. But again, in these types of markets, emotional, you could say that they overshoot on the upside, overshoot on the downside. That's where I hear it's going to be bifurcated tech tape. And that's what we've been doing with our investors. It's hand-holding through it. It's easy to yell fire in a crowded theater and just say, wait for the storm. That's just not, in our opinion, the best way to handle it.